What is up, guys? Welcome back to Bitcoin and Markets. My name is Ansel Lindner. It's been a little bit of a hiatus here on the podcast feed, but I do live stream 3 times a week over on YouTube and Rumble and Telegram. So you guys can check out the links down in the description below. Make sure you're following me on Twitter as well. I do plan to do less editing and just push out the copy and paste audio into the podcast version. But that is a process that I'm still working out, especially since now that I'm writing with Bitcoin Magazine, there is, my schedule is a little bit different here and there's more time constraints on the writing side. But okay, thanks for sticking it out. Thanks for hanging out. I'll hope to see you on the live streams, and let's jump into this one. What is up, everybody? Welcome back to another episode of Bitcoin and Markets. I started and my son just came into the room right as I pushed go. But okay, so how are you guys doing today? Happy Wednesday. Bitcoin price is spiking, and I know I feel better when there's a big green candle on the day. So it's a good day to be in Bitcoin. We're going to take a look at the price chart. We're going to talk about why Bitcoin went down yesterday versus everything else that it's correlated with going up. It seemed like Bitcoin was being left behind by the market. So we're going to cover some ideas about that. And then I have just a brief clip of Kathy Woods, and she's talking about the Bitcoin ETF, the likelihood of that getting approved relatively soon, and that she unexpectedly uses my exact verbiage that I've been using now for about 6 months to describe Bitcoin, or maybe even longer. So anyway, that is what we have on deck for today. If you're watching on YouTube, Rumble, like, comment, subscribe. If you're catching us on Twitter, I don't live stream on Twitter every single time. Check out YouTube and Rumble. You can find those in the tweet in my profile that I just put out, and jump on over there, join the community. Also Telegram, t.me/Bitcoin and Markets. That's where we hang out all day. We're talking macro stuff. We're talking rumors. We're community things, culture things in Bitcoin. So check that out, t.me/Bitcoin and Markets. Okay, let's share the screen. And this is the Bitcoin price Telegram. I shared this with you just a little while ago, but let me put on these moving averages here too. This is pretty crazy. So we did have this channel that we have identified in the past. And let me see if I can bring up some other lines that we were watching. Okay, maybe that'll help. So this line, this red line here, which wasn't on my initial chart that I shared with Telegram. So I'm going to snap that, share that over there to Telegram. Since they don't have the video, they just have audio over there on Telegram. Okay, so you can see that we identified this channel. We also identified this high close back on November 1st. If we could close above that, we were going to the top of the channel. That happened. We overextended, went way above the channel in a kind of a fake out here. Then I wrote on Thursday in the Market Proton, I said, well, wouldn't it be crazy if we faked out up top, then faked out the bottom, and then continued? And lo and behold, look at what has happened here. This is crazy. So we went up. This black line goes all the way back to the low weekly close back in January of 2022. That's where I'm getting this black line from. So that was like the last line of resistance at 36,000, roughly 300. And we have crashed through that, went, sliced back through it the other way. And now we're above it, sitting at 37,472. Bounced right off of the 20-day moving average that happened to be at the bottom of this channel. And guys, it looks like we're going higher, like imminently. So that's important if you think about, what's happening this Friday, right? There's a possibility that the ETF can get approved. All the ETFs can get approved this Friday. The market seems confident. All right. Now, I wanted to also put on here the S&P 500 because yesterday we had CPI, and I live streamed that, guys, too. So on those important events like S&P, or sorry, CPI and the Fed. Most of those decisions I live stream. So make sure you're subscribed on YouTube and Rumble, and you can join me for those live reactions to everything that goes on. But okay, so this is the S&P 500. And what I'm going to do is show you what I'm talking about here. So yesterday, the S&P 500 had a nice, healthy, big jump, while Bitcoin went down over the last couple of days. However, Bitcoin led this whole thing. Bitcoin was the leading indicator, and it led. So I'm going to share this as well with Telegram. So what I'm trying to say here is that Bitcoin led the whole thing. It got to very extended on the upside. If we bring up the RSI, it hit all the way up here at 88. I believe that's 88. Very, very overbought. And we needed to have a technical correction. Now, Bitcoin was starting again, once again, back on the 9th of November. Bitcoin once again was leading a breakout. But we remained too overbought technically. So we had to have a cool off. And I talked about this on multiple issues of all of my content that I put out, my written content, my newsletters. I'm saying, look, this is overbought. We need to consolidate some way or other. We need to get out, cool off, get out of this overbought territory. And look what happened. It dropped right down into neutral territory, and now it's going back up. We have reset all of the calibrations. Because look, okay, if you go back here to the 10th, we closed at 37,350. But RSI was way up here at 85. I mean, it was significantly overbought. Now we're at the exact same level, basically, but RSI is only at 70. So we have a lot more room to roll onto, to the upside. Of course, this does set up a possibility of a bearish divergence, but we have a long way to go until that actually affects the price. Okay, so that is why we see Bitcoin going down yesterday, even though all the other markets went higher, because Bitcoin it was too overheated. It led the thing, it was too overheated, but now it's joining. So now it's coming up with everything else, and it's a beautiful thing that it works out. Now, one thing I wanted to talk about is a slow tidal movement. Okay, when news like the CPI, that doesn't actually affect the fundamentals or the value of these things. Because for one, CPI is way old, right? It's for October, this one that got released yesterday. And we're halfway through November now. So it's not like current day news. But what happened was the market already knew what was going on. They already knew that we were we were climaxing, is what I talked about it as several weeks back. The trends were in terminal. They were terminal, and they were about to reverse. This was happening in October, while CPI was being formed that we just learned about yesterday. So this is a slow tidal shift. Now let's bring up a few other charts. Let's bring up the 10-year. Okay, the 10-year topped on October 23rd, and it had a significant change. However, if you look at the RSI, the momentum stopped on October 3rd. That's when the momentum stopped. And it's not a coincidence that that's right around the start of the quarter. It only missed the start of the quarter by one trading day. And I've been talking about, the end of Q3 is when we're going to see all these things happen. Well, look at the top of the RSI. It happened 2 trading days into the new quarter. So this was already written. The tidal moves of the market had already formed. And that those tidal moves are a switch from expansion, inflationary expansion. In an inflation period, rates will rise because money is loose. But on October 3rd, we switched into a new paradigm. We had one push higher, but that was ill-fated. And a lot of people saw it, but most people didn't. Bill Ackman actually sold like pretty much at the exact high. I went back and checked that. So this was already shifting back on October 1st. And now what we're seeing is a tidal move into a pre-recessionary period. Pre-recession is characterized by falling rates, or falling yields, I should say, rising stocks, and rising other safe haven assets like Bitcoin. Okay. So that's what we should expect going forward over the next several months. These are big time moves. And of course, like let's look right here. Okay. November 9th, there was a big green candle on the 10-year, but it petered out. Okay. So these type of tidal movements can't account for in small intraday sort of movements. Just think about, when a tide is coming in or out on the ocean, there's going to be lots of different waves. There's going to be lots of, different heights that a single wave will get to. A big wave will come in as the tide is going out, and it will reach up farther into the sand. The next wave will come in and won't reach up so far, but then maybe the third wave is going to reach back up to that top level. But it's still there. The tide is still going out, and you can predict what is the eventual outcome. You can say, guys, this water's going out, even though macro analysts will look at the height of the last wave and be like, oh my God, we're going to reaccelerate with inflation. Rates are going higher. Oil's going higher, all this stuff, because they bite off on those individual waves when the tide is telling you what's going to happen. So the tide right now is towards pre-recession. Pre-recession is lower yields, higher stocks, and higher safe havens like Bitcoin. I also point out in this week's BM Pro, so I'm writing for Bitcoin Magazine Pro. It might come out today. It might come out tomorrow. I finished it up this morning. But one of the things I say in there is that, a lot of people think of stocks as a risk asset, and they are, but not all the time. Okay, 90% of, like, say, the S&P 500 is a risk asset. Those individual stocks, the most risky 90%, those are risk assets. But the top 10% aren't, especially the Magnificent Seven. They are treated more like safe havens. Okay, so the stock market gets a bid. The top stocks get a bid in these periods as a safe haven. The the index as a whole, will go higher. Now, in good times, when it's truly risk on, then the bottom 90% push and lead, and the index still goes up. That's why we see, if you look back at the last 15 years of the stock market, it's, we have these pullbacks and stuff, but it keeps going higher because the different stocks that make up the index have different characteristics for different conditions. Very interesting. But speaking of that, let's take a look at the stock market for today. This huge gap up yesterday in the S&P 500 for the CPI, and then we were even gapped up this morning, filled the gap during the day, and we are going to close a green candle. If you look at the RSI here on the daily, you are almost getting to oversold. And if we look back in history, let's just look back for this year and stuff. We've had a couple periods of oversold conditions. It kept pushing higher. Okay, this oversold condition went down. Let's go back in history here. So we probably will have a correction with oversold conditions, but the general direction is higher for the stock market. We could see some volatility coming. So, drop down. Let me bring my measuring tool out. 5%, lose 5%, and then go back up again. But by the end of the year, over the next few months, I would say into February and March, stocks should be significantly higher. We should probably get to an all-time high on the stock market. We are only 6% below the all-time high. So we'll probably get there. All right, let's take a look at oil. Oil, same thing. We peaked at the end of September, which is, obviously the end of Q3. Was that the last trading day? No. Second to last trading day of the quarter. Peaked in a period of resistance that we have been talking about and having on the chart for a long time. And ever since then, it's been generally lower. Here was a wave that tried to break the tide, couldn't break the tide, and we have just been selling off and selling off and selling off. 76.41 is the current price on WTI. And last one, let's take a look at the dollar. When did it peak? The dollar peaked October 3rd, same time as rates or yields. Gosh, I keep saying rates. Same time as yields peaked. Very, very interesting. The tide is going out. We are going into recession. And actually, I'm going to snap a couple of these and share them with Telegram. Damn, I forgot to do that. Sorry, dudes. I should just share my screen, but I don't want to have multiple things going at the same time. So there's that one. And what else did I talk about? The 10-year. I'm pretty sure I already sent that one, but okay. So now you guys are caught up. Sorry about that. All right. So that is what's going on with Bitcoin. That's what's going on in macro. This tide is going out. We're going into a pre-recession period, and we should expect yields to come down, stocks to go up, and Bitcoin to go up as a safe haven. Okay, now next thing I want to get into is this recent video from Kathy Wood. Let me share this tab here. This is a tweet from Bitcoin Magazine, and I wanted to get her opinion on the ETF.
Speaking of groundwork, on another product that you're working on, of course, the spot Bitcoin ETF, which you are also partnering with them on, and you've got your filing in. There's a lot of filings in. Every day, seemingly, there is a new rumor about approval of one of these things. What are you hearing from the SEC at this point? There's a January deadline I know that people have been looking to. Or how confident are you that you're going to get approval?
Well, something has changed. So we had put in a number of times a filing, and we were just denied. Never got any questions, really never got any response. This time, this summer, we got questions back from the SEC. Now, normally when you get questions from the SEC, you're just saying, oh my goodness. We were thrilled to get questions back because it means they're engaged now. Now, we have met a number of the research people at the SEC on the research side, and they are extremely sophisticated. They know what they're talking about, and the level of sophistication of their questions suggested, okay, now they're moving deeply into this. And we answered those questions. We have not heard back. That's a good sign too. They never tell you that you've satisfied them, but if you don't hear from them, that usually means that you have satisfied the answers to the requests. So that was new, and we also know that BlackRock got questions. We put our answers in first. I think they have followed, and I'm not sure about anyone else. That was different, and it says, okay, there's movement, and we are the first in line, just because we kept refiling. Others get.
All right. So the important word there is that something has changed. There was no new news, I guess, in what she said there, that yes, we understood there was an unprecedented new request for information from the SEC, and everybody has since updated all their filings and things. So that wasn't new. But the way that she is talking about their relationship and how they're getting closer, and the people are asking sophisticated questions. I mean, Gary Gensler taught this stuff at MIT. He's very smart on Bitcoin and this entire space. He knows what's going on. So it's not a surprise that the SEC is also up to pace on this. And it's almost like Gary Gensler's tenure is going to be defined by this. It's going to be defined by how he has set the groundwork, or they have set the groundwork for dealing with scams, scam tokens, and Bitcoin. So that was some of my thoughts. But let's go to the end here. Let's go to 6 minutes in. So for Telegram, we're going to 6 minutes. She's going to talk about price.
Knowns out there. You mentioned you guys bought into Bitcoin at 250 way back when. So the return from 250 to 35, 36 looks pretty good. Yeah. But it's not 100,000 that I think you and I have talked about at various points, or even loftier numbers. Where are we in that cycle?
I think, so if we look at the reasons that Bitcoin will scale, so our base case is today $600,000 to $650,000.
Okay, her base case is $600,000 to $650,000. I haven't read the report. I'm sure it's pretty good, but that is, what would you guys say? Is that this cycle target, or is that next cycle's target? If all these ETFs get approved, I would say it's this cycle's target. But yeah, okay, let's continue.
And our bull case, based on the scarcity that is now developing, we're at roughly 19.5 million Bitcoin out there. There will only be 21 million ever, and we do believe that. We think that institutions, if the SEC blesses a Bitcoin ETF, institutions will feel like the coast is clear for them to pursue. And we know a lot of institutions have been researching crypto assets for a while and do agree that it is a new asset class.
Okay, so she thinks that if the ETFs come, all of these new institutions will come. It's institutional money. We've talked about here on the show about the assets under management for all of these people all these applicants for the ETFs. I mean, it's in the double-digit trillions. And if even 1% gets allocated over to Bitcoin, I mean, there's not enough Bitcoin to go around. So the price is going to have to go way, way higher. And that is just in the short term. I think that's in a 1-year time frame. If you go out to 2 or 3 years, Bitcoin could get as high as a 5 to, maybe a 5% allocation from the assets under management. And that is, we're starting to talk into the 7-digit range for price. So that's only 2-3 years after these ETFs get launched. Okay, and let's go out to the very end, because she said something that I wanted to highlight here.
It is a new asset class. It's there's an opportunity to diversify and increase returns per unit of risk. That's very important. They've also learned that Bitcoin in particular can be a hedge against both inflation and deflation.
Bam. That is what I've been saying for the longest time, because I am on we are in a deflationary environment. There's barely enough quote unquote inflation or credit creation just to keep the bubble pumped up. We can't reach escape velocity. In other words, the global economy cannot reach escape velocity and grow out of its problems. We are in a terminal decline in a gigantic global credit bubble that's been around for at least 50 years. probably going back into the 60s. So we're starting to talk, 60, 70-year credit bubble. That's what we're getting to the end of, and we can't get out of it. So I say that Bitcoin is primarily a hedge against deflation, which, entails having no counterparty risk. So if I own an asset, a house, or if I own bonds or I own something else, there's counterparty risk involved there. When you have a mortgage, when you have treasuries, especially corporate bonds or whatever, there's counterparty risk. And Bitcoin doesn't have that. So in a global collapsing credit bubble, you want to have assets that don't have counterparty risk. And it's better than gold, because gold has counterparty risk because it has to be held in vaults, in allocated accounts. It can't be shipped around so easily. So that's counterparty risk. Who holds the gold? Oh, it's in Bank of America's vault. It's in New York Fed's vault. That's my counterparty. That's my risk. Bitcoin doesn't have that. You can send it around the world in 10 minutes. It can be delivered like no asset has ever been delivered. And so it is a hedge against deflation. Most people in this space think it is a hedge against inflation, which it also is. But we don't have runaway inflation. Just look at CPI. All right. And the last thing she said, or one of the things she said, was about an asset class. So you're talking stocks, bonds, real estate. I mean, these are gigantic asset classes. Commodities. And now you have Bitcoin. I would put Bitcoin personally into the commodity basket or into a money basket. Not necessarily currencies, but into a basket of commodities, monetary commodities like gold and silver stuff. So it is technically not a new asset class, in my opinion. But if you lump in scam coins because you are miseducated about, what the innovation is here, then I can see how you would think it's a new asset class. And people that are investing in that way are going to, we talk about 60-40 portfolio. Maybe some people have 10% of their allocation towards commodities or something like that. So Bitcoin could become a gigantic asset class all on its own and get 5-10% of portfolios. I think it's huge. It's absolutely huge if you call it that. Okay, so that's going to be it for today, guys. Thank you for joining me, Ansel Lindner, Bitcoin and Markets. Check out bitcoinandmarkets.com. That's my homepage. I put out all my content there, weekly newsletter. And when I do drop blog posts or podcast versions of these live streams, those will be on the website as well. Check out bmpro.substack.com, writing for them once a week. Getting some major calls right. Anticipated this CPI, anticipated the spike in stocks, the spike in Bitcoin, and the decline in bonds. All those pivots that we just looked at the charts at the beginning, pretty much have been calling those dead bang on this whole time. So check out bmpro.substack.com. And that's going to do it. Thanks, guys. See you on the next one. Bye.